Okay. This last week, previous sessions, we ended Unit 9, right?
Yeah,
Okay. Just curious, have you went to the video and the past workshop and take a look?
I haven't looked through the videos, but I have looked through like all the units and read through them.
Okay. Okay. Very good. So you have some idea, I suppose.
Yeah,
Is it difficult to understand?
I think I more or less understand, but it'd be better if you could elaborate.
Yeah. Yeah. Sure. Sure. But I just want to understand your
Mhm, yeah, yeah,
background,
of
right?
course.
Okay, now we're going to cover this unit 9. Again, this is under kind of the basic, right? Before we go to the the actual workshops, right? Now, when you place an order, right, to buy and sell a currency, there are a few standard order. One, as can you see my screen?
Yeah.
Okay, you can see from the screen here. Example, we talk about long and short, right? Long means you are buying, short means you are selling, right? So this is
Yeah.
standard terms that we use. Now, and then for the order types, basically there are I think two or three types. Three types, I think. First of all, first type is market order. Now, what is a market order? It means that let's say the price is trading right now at 1.2125. Okay,
Mhm.
and the price is trading right now at this level, and you are very bullish that you expect future price to go higher, and you want to buy right now. You do not want to wait anymore. You want to buy at the current price, right? So you go to
Mhm.
your platform, your broker platform, and you key in buy and market, right? So when you buy and market, you might see the price show on your screen is 1.2125. Okay, but you might not, your order when you get filled, not necessarily your order will fill at 1.2125, because when you put a market order, you are basically telling the broker, I do not care what price you can get me, so long as get my order filled, right? So in other words, when you put a market order, there is a sense of urgency that you
Mhm.
want to get into the market, right? So usually the broker will give you a very, very bad price. So example, if the price is trading and show you on your screen is 1.2125, when you put a market order in, you might end up your order get in at 1.21, let's say 30. So already you lost 5 pips. Can you see now?
Yeah.
Okay. So again, this how many pips that you're gonna have this this we call slippage. Slippage. How many slippage you're gonna have? It also depends during the time of the order executions, whether the market is a quiet time or is a volatile time. Means the market is very moving up and down, very quite active,
Unstable.
right? So when the
Yeah.
market is quite active, usually you will not get you will get to feel at a price which is far away, right? So usually we do not want to get in at the market price, right? When you want to enter a trade, we always want to tell the broker, I only want to get in at 1.2125. That's it. Anything higher than 1.2125, I'm not interested. Okay, so this is called market order. Any questions?
Nope.
Okay, so the next one is a limit order, right? Limit order. Now, what is a limit order? Now, again, I use back the same example. Let's say this green line, horizontal line is 1.2125. Example, okay? And right now, the price is at this blue dot here, which is 1.2135. Okay, the current price is trading at 1.2135, and you expect future price to go up higher, and you want to buy, but you are not willing to buy at 1.2135. You want to buy lower, so you can put in your buy limit 1.2125, right? So in other words, if price did not come down to 1.2125, your order will not get filled. So when you put a limit order, in this case is a buy limit, it means that you are telling the broker get my order filled at the price I want, right? Or better. Anything worse than 1.2125, I'm not interested. Can you understand?
Yeah.
Okay. And then the reverse is true for selling, right? When you are bearish in the market and you expect future price to go lower, right? Let's say price is coming up, and you say, well, you expect future price to go down, right? And you are not willing to sell at the current price. You say, I want to sell higher, right? When you want to sell something, we always want to sell higher. So let's say the higher price is here, 1.2125. It's at this level, but right now the price is trading at 1.2115, and you are not willing to sell at 1.2115. Say, I want to sell higher, so you can put a sell limit at 1.2125. So if the price comes up and it did not come to 1.2125, your selling price, your order will not be triggered, right? So again, this is opposite of buy limits. So far, okay?
Yeah.
Okay. Then the next kind of order is we call buy stop and sell stop. Now, what is a buy stop and sell stop? Let's say price is trading like this, okay, and there are many traders look at this. Hey, the price is already trading for 1 time, 2 times, 3 times. So it looks like when the price comes up, they expect this price to break above, right? Break above. So let's say this price is trading at 1.2125 again. Same example. This level is 1.2125, right? And this trader think that the price is going to is likely to go up, break above that horizontal line. We call this resistance line, right? And then continue to go above, right? And they are worried that they might not want to, they might miss the trade. So what they usually do is they put a buy stop above the current price. So let's say it's 1.2130. So when they put a buy stop, their bias is future market is going up, and they are basically given instruction, standing instructions to the broker. Look, I want to buy this particular currency if the price trade above 1.2130. If the price trade below 1.2130, I'm not interested, right? So that means that once the price push through 1.2130, this order will be triggered. Now again, when you put when the trader put in the buy stop, this is a market order. All the stop order are considered market order, right? That means to say that when the price push up very fast, even though the trader put in, I want to buy at 1.2130, but because this is a market order, you might not get filled at 1.2130. You might get filled at higher price. Because why? Because this is not the limit order, this is the market order, right? So in other words, whenever we put in a market order, we might not get filled at the price that we want. So you might end up get filled at price 1.2135 example. So you lost 5 pips. Can you understand?
Yeah.
Okay, so that's the difference between buy limit and buy stop. All right, and always remember buy stop. People will use the buy stop to get into the trade, and at the same time, some people might use a stop order to get out from the losing trade. Now, let's say example, I have a sell order there. I want to sell at this level, so I put a sell limit there. Right, sell limit is, let's say, 1.2125. Okay, and the current price is coming up. Okay, and I believe that future price is going down, right? So I only want to sell at 1.2125 at this level. So when I put in my trade here, and I told myself I'm not going to risk all my money on one single trade. What if this price come up and trigger my order, my sell order, and continue to move higher? So I can end up losing a lot of money, right? So some traders say, well, I'm not going to lose every dollar in my account for this one trade only. So what they do is they put a stop loss, stop loss, yeah. So what's the meaning of stop loss? It means that, well, if the price trade above this my entry price, and it continue to go above. Let's say the stop loss I put in here is my entry price to this stop loss is, let's say, 20 pips. So my stop loss will be 1.2145. Okay, so once I put in my entry and my stop loss, so and then I can basically off my computer and I can do whatever things so as I'm not in front of computer, but my order is already a standing order in a broker platform. So when the price come up to this level, it trigger my sell. Now, if the price reverse down, and that's it's very good because I'm making money. But in the event if the price did not reverse down and the market continue to move higher, the moment it trigger 1.2145, this trade will automatically cancel, close out at the maximum loss of 20 pips. All right, 20 pips. But again, this stop loss is the market order. It's the market order. Right, all the stop loss are market order. So it means that when there is a news or when the market is very active and the market moves very fast, it cut through this stop loss price 1.2145. Again, you might not get out exactly at 1.2145. You might get out slightly above, let's say 1.2150. You understand? So market order, when we put in the market order, basically it means that we will not guarantee to get in or get out at the price that we wanted. Okay, that's called market order. Okay. Any question on this order?
Understand that.
Okay, yeah.
Yeah.
All right. So I think that's it about this order. Okay, now come to the chart. So let me just show you another one, right? So let's say the blue line is the current price, okay, and let me just try to see whether you can realize. Now let's say I want to buy this blue line is 1.2125, okay, and I expect the current price is right now trading here, and I expect price to go higher. I expect future price to go higher, right? The current price is here. And I do not want to buy at the current price. I want to buy at 1.2125. What kind of order should I put in?
Should you put in like?
Just now I explained to you the order, right? Buy at the market means when you buy at the market, it means that you buy at the whatever current price, which is here. Okay, that's buy at the market price. Now, and the other two type of order is one is what? Buy limit,
and buy stop.
One is buy stop. So which one? If you want to buy 1.2125, what kind of order should you put in?
Buy stop.
Buy stop? No, it's a buy limit. You expect price to come down. Remember, you are not interested to buy at the higher price. You want to buy at the lower price. So you put in a buy limit. Buy limit. All right. A buy stop meaning that's the price trading here, right? The current price, and you expect price to go up, break out very fast. You say, okay, I want to put a buy stop. So if you worry that price is going up from the current price, you put the buy stop. If you say, well, I don't care about price running away, I just want to get in at the price I wanted, then you put the buy limit. So in other words, when you put the buy limit, it is always below the current price. When you put the buy stop, it is above the current price. Can you understand this?
Yeah.
All right.
That makes more sense.
Okay. So now let's say another example. Now let's say the current right now the price is trading below. Right? It's trading right now over here. Okay. 1.2050. Okay. And your buyers is expect future price to go lower. So you have three choices to get into this trade. Either you sell at the current price, which means that you sell at the market price, or you can sell stop, or you can sell limit. So let's say you want to sell at this price. You want to sell at higher price than the current price. What order should you put in?
If you want to sell at the current price, you should put in just a market order.
Okay. What happens if you want to sell higher than the current price? What order should you put in?
Sell limit?
Yes, sell limit. Remember one thing, whenever we use a limit order, where is it? Whenever we use the limit order, what we are telling the broker is, I only want to get in at the price I wanted. Not your price, not other people's price, my price, right? Same thing as buying. When you want to buy at the price that you want, you always put a buy limit. So if you back to my example, to you here, this example, right? Let's say where was it? Okay, this here. So the current price is 1.2150, and you say, well, I want to sell higher, which is my price, 1.2125. Sorry, not 2125. Yeah, to 1.2125. So you should put in what order is what? Sell limit. Right? So long as price do not come to this price, you will not be your order will not be triggered. Okay? Yeah, okay. So if you want to sell below, let's say 1.2040, what kind of order can you put in?
If you want to sell below,
yeah, the current price is 1.2050 right now, and you want to sell at 1.2040. What order you put in? Sell
stop.
Yes, sell stop. So what does it mean? It means that if the current price is trading at 1.2050, and once the price trade below 1.2040, your sell order will be triggered. So you have one sell order there. You got it now, right? So that's the difference between okay, okay, next we go to this the chart, right? Now Forex chart, basically there are a few types, but most of the common type that we use are only two types. One is called bar chart and one is called candlestick chart. Do you know anything about it? Have you read this already?
Yeah.
Okay, so the candlestick chart and the bar chart, they display four information. Only four information. They have the open price, they have the high, they have the low price of that particular time, and they have a closing price, right? So these are the four information displayed in all candlestick. This is called candlestick chart, and this is called bar chart, right? Whether candlestick chart or bar chart, we always have four information, right? So now and this kind of candlestick bar chart, they can go by different time frame. Example, this one bar itself, it can be 1 hour, right? If we want to look at 1 hour, it can be 1 hour. If we want to look at 4 hours, it can be 4 hours. If we want to look at daily, it can be daily. We just click and change the time frame. That's all. All right. Let me show you the chart. Have you seen the chart yet?
Yeah.
Okay. Now look at this. This is can you see my chart?
Yeah, I can.
Okay, this is 1 hour. Can you see now? 1 hour. So 1 hour, it means that every candlestick, this is candlestick chart, every candlestick represent 1 hour. So if let's say I say, okay, well, this is 1 hour. Now I want to go to the higher time frame. So you can see a different time frame, right? Let's say I want to go to 4 hours. So now every candlestick represent 4 hours. I can go to 1 month. Now every candlestick represent 1 month. I can go to whatever time frame. I can go down as 3 minutes. Now every candlestick right now represents 3 minutes. But whatever time frame I goes to, they always display four information, right? The open price, the high, the low, the closing price. All right. So far okay?
Yep.
Okay. So now let's go back to our PowerPoint. Okay. So that is a bar chart, yeah. So now we come to the candlestick chart. Now candlestick chart and bar chart, they are the same. All we need to do is the open price is always on the left. This open price. The closing price is always on the right, right? So when we have a closing price which is higher than the open price, we say that this bar chart or this candlestick chart is bullish, because the buyer, you see why we say bullish, because initially when the market opened, it opened here, right? And during this particular time frame, it can be 1 hour, it can be daily, it doesn't matter, right? During this time frame, the market goes up. Why the market goes up? Why the price moves up? Because the buyer comes in and they push up the price. So the seller is very weak. So when the price comes to this level, seller decide to come in to sell. So now seller overwhelming. Now we have less buyer, so price go down. Then you make a low here. So when the price was here, before this, let's say this is 1 hour time frame. Before this 1 hour is up, the buyer come in again because they feel that this price is low enough. They come in to buy again, and at this price, seller is not so willing to sell because they only willing to sell at the high. They are not willing to sell at the low. So when the price is so low, we tend to have more buyer than the seller, and therefore we see the price move back up again. The buyer push back the price, and once the 60 minutes time frame up, the closing price is here. So on this particular 60 minutes bar chart, we say that the buyer has the control. The buyer has control because from the time this bar chart opened, it was here. By the time this bar chart closed, it was here. So the closing is above the open price. We say that this is bullish. The buyer have control. You understand?
Yeah.
Okay. So now, if you understand the bar chart, the next thing is quite easy. We talk about candlestick chart. Now, a candlestick chart, basically, we just draw this like this, and it becomes a candlestick. See, it's already a candlestick.
Yeah.
So again, no different here. If the opening price is below the closing price, this usually we say that this candlestick is bullish. And usually traditionally trader like to use green candle, the body candle as a green to indicate that it is bullish. And trader use red color for bearish, right?
Yeah.
When we see a red color, it means that the opening price is here and opening price is on top. We immediately know, right? So that's how we read candlestick chart. Okay.
Yeah.
Now, of course, another one is called line chart. Line chart. Let me show you the line. Have you seen the line chart before?
No, I don't think I have.
Okay, let me show you the line chart. Okay, so this is candlestick chart. Now, how we you can just go to here. You can see here this is a candlestick chart.
Yeah.
I can change to this bar chart. Now, can you see this is the bar chart, right? Now I can change this to line chart. Now this is line chart. Okay, a line chart basically they connect all the closing price. Remember, a candlestick have 4 information: the opening price, the closing price, and the low and the high, right? And all this swing point is the closing price. So we see a line chart, right? If we convert this to let me give a second. To this bar chart, it looks like that. We candlestick chart. Okay, they are all the same, right? So depend on what kind of chart you feel comfortable. And traditionally, most traders like to use candlestick chart because they can see the body rather than bar chart. Bar chart is a bit nothing there. Okay, and very seldom people use line chart because there is very little information. You can't even tell where is the opening price or closing price. You cannot see who is in control, the buyer in control or the seller in control, right? You can't see at all, right? So line chart we seldom use. We usually use the line this candlestick or this bar chart. Okay. Okay. So that is the chart. That's it for the basic. Do you have any questions?
Question.